All right, there we go. We're starting recording. Hello, everybody. This is Max Farrow from Dex Markets. This is an impromptu trading view training session, and it's going to be an open session. You know, if you got questions, come out and ask. If you got issues, come out and say something. If there's something you're missing, or if you're not able to get into something, or what have you, this is the spot to do it. You're a green member, a green room member, or a den member. This is your spot. This is what you pay for, is to be here in these processes. We are working out a lot of bugs and issues with the site and things that we're working with. Lots of things are moving to the wayside. We're taking things off of the website. We're going to be putting more training on. We're going to do some training in this meeting today, and I'm going to be showing you some little tips and tricks on using the system itself, even it getting started. All right. At this point, does anybody within the process have any questions? If you're inside the participants gallery here, if you have any questions to start off with, and before I get just plainly started.
Yeah, Max, I posted this, and I get this a lot when I'm talking to people. And it's, if you could go over the differences between the different color support and resistance lines.
Okay, that's a simple one.
Yeah, I know it is, and I know the answer, but I think it should be elaborated on, because when I explain it to people, it's like, oh, that's what that means.
Okay. All right, that'll be one I'll cover. Anybody else?
I can do a quick video on that later if you want, just for posterity.
Please.
Yeah.
Yes, please. All right, so everybody here should have their stuff started. So let me go through on the network here. When pull up my screens, we're going to just go with a completely new chart layout, which is absolutely blank. Now, you may not see what I see because you might have some things missing. You might have a different color. Your stuff might start off with a light theme. You might not have red and green. Yours might be blue or red or whatever it is. Everything is changeable. There is a part of the charting system that called default, okay? And if you right-click the chart itself, okay, just right-click the chart, you can go to appearance, okay? And in this appearance, you can create a template. Like if you like it a certain way and it doesn't save, you can create a template. If you make a mistake, or if you hide something or something disappears, simply come to this page, right-click the chart, go to settings, go to appearance, go down to template, and do apply defaults. This is basically with anything. If I have a new indicator that I've sort of messed up, or I add variables I didn't like and I just want to go back to defaults, you can do reset settings. Now, one problem though, if you do save as default, guess what? Your setting is not going to be, this one system would be set as default. So you would have to remember how you had it, okay? So I'm going to turn mine back over to dark because I have a problem with my left eye. And it takes a lot of glare from white screens. So I like the dark theme. Okay. Now, when you first get your new chart layout, if you're using a free system over on, you're only going to get one chart layout and one major indicator. Okay. Actually two with our built-in indicator, because that one doesn't count. So you're going to get your chart just like this. Now, if you have your screen closed in like this, like you got a whole bunch of stuff on the right-hand side and you got a little tiny screen here, or sometimes you might see on somebody's phone, you know, it might be on somebody's phone. These headers up here, okay, these little menus may get scrunched down. You may not be able to see them, okay? So that's another little trick in there, is to make sure that you have a nice wide screen to work with. One, this is going to help you with your being able to look at the candles. And two, it'll have all your tools set out properly. You don't need to worry about what replay or alerts are at this moment, or even templates or financials or the compare button. You just have to make sure that your time frames are correctly, you're using your assets, The time frame is 5 minutes because we're only going to be using the 1 hour. We're not even going to worry about 2 hours or 5 minutes or any of the other nonsense, okay? Or 5-minute trades or 2-hour trades. We're only going to be worrying about 1-hour trades. And on a 1-hour trade, we wanted it the 5-minute section. So the time frame's right. Candles, there's a lot of different things you can use, okay? You could use bars. You could use hollow candles. You can use hanky ashi. These are all different things that you could use to even line charts. You could use all that stuff if you wanted to. But what we teach here is the availability to use the candles. Everything else is personal preference. But what I don't want you to do is spin that personal preference anywhere else. Don't tell everybody else about, I use a stochastic with this, or I use hanky ashi bars, or I use a line chart. If you have success with that, keep that to yourself at that point. The reason being is because they all work in one form or another. But what I need to do is keep it to a very systematic process that we are teaching here at Dex. Okay, so use your candles. Now, the other good thing about TradingView that is really fluid for us is that you can come down to the settings bar. Like I said, right click the chart, come down to the appearance, and you could literally change these colors to anything that you want. Okay, it could be any color or any size that you desire. Now, one thing we did find out, if you're using Internet Explorer or another type of browser or what have you, there's some details that might be a little bit different. The look of your arrow, the look of the lines, or what have you, but they all should be pretty relatively the same. Now, let's jump into indicators. When you had first sent over your Dex, let me get into the system, your Dex TV portal, and you've gone up to sign up for your indicator, and you already have your account, okay? If you don't have your account, go get one. You can hit that button. But you already have your account, and you filled out this form. First name, last name, email, and TradingView profile link. What is that, by the way, the TradingView profile link? Well, if you go to your profile, these little lines up here, Dex, profile, your profile link is right up here in your URL. See, ours is DexFX Markets. DexFX Markets. You take that copy and you paste it into that area before you hit submit. Make sure you got your email, make sure you got your first and last name, and you hit submit. We check that against our records, and then we get you the indicator. Now, where do you find the indicator afterwards? After you've been accepted and it's been given to us, where do you go now? And it's very simple. Remember, this is our blank first time set as default chart that we have set up, okay? Well, before we actually add the indicator, I want to remove something. This volume indicator down below is not really needed. So I'm going to hover over the indicator here. This is our pair and information, and this is our indicator. We're simply going to click on the little cogwheel. I'm sorry, no, we're not. We're going to click on the little X right next to it, and it's going to disappear. And that's good because we don't need it. Now, we have a completely blank chart, and we refer to this as a naked chart. Divert your eyes. The process of having a naked chart means that there's no indication of system on there or basically any major lines. If I put a line on it, it's no longer a naked chart, but the reference to being a naked chart means that there's no indicators on it. These lines that we create on it now are our own subject, of what we want it to be. So the different levels, following a trend, or doing whatever, okay? The lines on the left-hand, or the tools on the left-hand side, all have, if you hover over them, have a little arrow that are right next to them. And it'll break out into having many, many, many more tools. We're not going to go through what all these tools are, only because there's a lot of information with all of these. And they're not all needed. Just as though there's just as many indicators out there. These are a lot of indicators. I'm not going to go through them all. Why? Because they're all not needed. We don't need to create more work for ourselves to understand. We just want to have a very simplistic chart system. So now you've gone to Dex, you've gotten the trading view, you've gotten the indicator, you sent your profile. I've added you to the indicator itself. Now, where do you get it? You click on indicator, or if your screen is shortened, you'll look for the word FX. If you hover over that and you click that, now, once you're invited to the script, you're going to go to invite only scripts. Click that. Now, you should have two options in here, the Dex Atomic for Nadex and the Dex Atomic B. The Dex Atomic for Nadex is for all things Forex. Okay, it's simplistic. There'll be some small changes coming to this one, but it's very simplistic, and it works. I would suggest only using this one to trade Forex. The Dex Atomic B is for commodities and indices. It's set a little different. It has a little bit different feel to it. And in later videos, I'll show you what that means. But the other reason why I say only trade Forex is because how many trades do you need to do a day? You don't need to do very many. You don't need to have 60, 70 trades going a day. You don't need to have indices and commodities and show that you can trade all these things. If you're making money with just using 3 or 4 assets a day, doing 2 or 3 trades a day, and you're doing well, and then you simply add volume from our equation of consistency plus volume equals goal, then why would you bother with anything else? Do you think that there could be some sort of secret, hidden, holy grail in commodities and indices? And the answer is hell no. I made this because I wanted to make sure that there wasn't that hidden grail somewhere in there. Like maybe the S&P 500 was very predictable at particular times, and we could insert some data from that. I've already done that. Why do I still have it there? Well, because there are people that do like just to trade the indices and commodities. They don't trade Forex. They don't like Forex. They don't like the way it behaves. They like some of the dependability of the others. But let me tell you, those markets can have wild swings as well. You're going to have just as many losses and wins in there as you are in Forex, because it all depends upon your patience and discipline, which guess what? Creates consistency, which then what? Adds volume, and then you get to your goal. You see where this is going? So if you're going to get into the process, which one do you choose? Forex, simple. It's very simple. So don't worry about getting the Dex Atomic B yet. The other is that TradingView is a very positive company, right? With Forex, all this data that you have is included into your plan. If you have a free plan, if you have a paid plan, or what have you, it doesn't matter. It's all free. The data that we receive for these, where these prices are at, are all included. But with commodities and indices, you're going to have to pay for more data. Why? Because commodities and indices is a regulated market, and that regulation has consequences. They need to know who you are. They're going to actually investigate you more and ask you more questions about who you are and what you're doing with the data. They're going to ask you questions like, are you trading for anybody besides yourself? Are you trading for a network? Are you a professional trader or just a home-based trader? They're going to ask you all these questions. Why? Because the markets of commodities are wildly influenced by the actual trades that happen. Even though that Forexes can be wildly manipulated, not by the average retail trader. But you get retail traders together in this market of commodities and indices, and you could affect the market. Now, us trading on Nadex, we don't affect the market at all, because Nadex is a derivative, which means that it doesn't actually attach itself to the market. We're not in the S&P, we're not actually adding or taking away from anything on the S&P. I equate this to be like off-track betting. Okay, we're watching a bet. We're making a bet on a horse race that we don't actually affect the odds on. And that's the same thing here. Nadex, that we don't affect the odds of, or the levels of Nadex or of this network of Forex or the commodities and indices if we were to use them. So now with that explained, I've simply attached the Dex Atomic for Nadex onto the chart. And you get this, the 3 primary elements, or 2 primary elements at this point. We still have one more thing to add. So we're going to go back into indicators. And this time we're going to go to built-in indicators. These are the ones that come with the actual charting system. There are other things in this, Okay, there's your scripts if you were to be making some, but most of you won't be. There's candlestick patterns, which is a new process that you have to sign up for. But there's a lot of stuff, and candlestick patterns are just like anything else. There's 50 million of them. They all have their very weird explanation of what they do and what they don't do. Okay, you can lose yourself in this pattern seeking process. Okay, or you can just simply go with the simple, and that's what our program is. So we're going to go back to built-ins, and we're going to be looking, and if you hit up here and search, start typing the word moving. That'll bring it down to moving average. And that's what we want. As soon as we click on it, up here in the top left, you're going to easily see that there's a moving average indicator. Now, if you hover over the indicator, you get some elements. One is an eye. The eye means hide. You can either have it on there or not have it on there. The element of the settings is what we're going to be looking for here and changing. The source code bracket and then the remove bracket. If you try to hit the source code bracket on your screen with the source code, I can see it because I have access to it. You as an individual here don't have access to the source code for the Dex Atomic. Why? Because it's priority. It's not very complicated, but I still want to keep it to myself on what it is. This is what our business is. But on things like the moving average and the built-ins, the source code comes up down below under what we refer to as the Pine editor. You don't really need to know a lot of stuff that's down here, just that's what that button does. If you do click on that, or if you do have any of these boxes open, just click on them again and remove them. Now we're going to go to the settings bar on the moving average, which is set to 9. Now, what does all this mean? Well, I like to keep everything set in default, and the only thing that I'm going to change is the length. This means that I'm going to change the 9 to 50. And when I change that to 50, what does that mean actually on the chart? Well, now it's taking over the last 50 candles and it's averaging them out, and it's placing that average onto the screen. Under this tab of inputs, this tab is for the inputs only. So I can change the source or the offset or what. We don't need to change any of that. We like it at the close level. We like it the offset of 0, and same as the symbol. Okay, so we don't need to put it on a different time frame itself. Okay, but to the right of that is what we refer to as style. Now in style, we can change the color, we can change the line type. I just like to keep it a line. I like to make the system a little bit more, just a little thicker. We can even go with that one right there. And that's how I like it. I like it set to 50, and I like it set to a little bit thicker. Now I'm going to come down to defaults, and I'm going to do save as default. And why is that important for me? So if I make a new chart layout, let me kill that one. I come back into indicators, and I go to built-ins, start typing in moving average. I click on moving average. Look what happened. It put on an MA50 for me instead of the MA9, which I always get stuck trying to do. So that's one good thing for setting setting things as defaults. So now we have our chart. We have our 2 indicators, and we have the 3-4 main elements of the system on the screen right now. The first element that we're going to talk about is the arrows themselves. These are set up to tell you about the micro trend or processes happening over a set of conditions. The conditions are priority. So I'm not going to tell you what the conditions are, but it is about movement, and it is about certain things that have to be met before that arrow will appear. Not every hour has an arrow. Not every movement has an arrow. But when it does, it's significant to watch. Some say, well, Max, shouldn't you just give us the arrows that we actually physically need? And the answer is no. I'm no longer going to be providing what we refer to as signals. I'm going to be teaching you how to read the market, how to work the process, using the arrows as an indicator to help you, just like the MA and the support and resistance lines, to help you trade. And why am I going to do that? Well, for one part, I'm an entrepreneur, and I want to make sure that you are being successful and not giving you too much information with not enough practical experience. If I just give you a signal and the signal goes away, you won't have some of the other features and processes that you need to learn how to trade. I want you to be successful. I want you to be able to make money. Why? Because you'll be here and you'll never leave. That to me is a smart business concept. Even if sometimes I lose clients because I try to hold their feet to the fire of being able to trade and not just need a signal or a bot to do it for them. If you're here for that, you may be that person. But I'm telling you right now, learn this process. What I'm about to show you is extremely simple to do, as most of you have found out, as many have showed you already by the many journals that we have to prove that. So arrows, important. They show a direction that you could go with. The second element, as we'll start to, before we talk about strategies, the second element is support and resistance. That's the lines that you see here that go horizontal on the site or on the chart. And some of them are in different colors, okay? And in some cases, the different colors are within a couple different shades of each other. We have this really light green, a little darker green, and red, okay? And in that process, there is a mentality, okay? The mentality is simple. The darker the color, the stronger the actual level. Now, keep in mind that the lines aren't lines at all. They're the boundaries of zones, okay? A single line just being there could be considered a zone within itself, what we refer to as a microzone. So every single line has a little bit of a zone around it. And I'll show you how to read those in a minute. But then a following line by it, like this red line and this red line, have what we refer to as the mean. That's the split between the two lines. So if this line here and this line here is a zone, a major zone, as we can see by the look of the levels that the price goes to, then right in the middle is what we refer to as the mean by the depiction of this yellow, big, bright yellow line. And if I do what Chris usually says, carpenter's view of carpenter's eye, where I just kind of eyeball the middle, I can start to see relationships with this line. Not perfectly, but pretty damn near close. What are the relationships? Well, the bottoming out of this price right here, and then again here, and then the top of it there, some movement there, a bounce here. And as you extend this line out, it becomes more evident that the price is respecting this line that's pretty damn near close to the level of this mean of these two bars, or these support and resistance. The support and resistance zones themselves become more depictive when you start looking at opens and highs and lows of a bar. Remember that a bar itself has some major features to it, the body and the wick. On a buy or a bull candle, the lowest portion of the candle, not the wick, but the lowest point of the candle is referred to as the open, where the highest of the body is called the close. Now the wick stands for that it actually, this is how high the price had gotten at one time before it retracted to close at this level. And the same thing is true on a bear bar, or a sell bar like this, red. The high of the body is referred to as the open, and the close or the low is the close. The wick is the highest or lowest that it has gotten during that time before it retracted to that. So when it opened at this level, at one time or another, it had reached this level. So the candle itself is a representation of what lengths the pair went to after the open and close of the bar. Now, if it closes lower than it opened, it's a bear bar. If it closes higher than it opened, it's a bull bar. Okay, so very simple. So what I look at mostly when I see a line that's very close is that I look at the high of any one of the bars. So I'm looking for the top of the wicks. Okay, and so if I look at the top of the wick there, and I put another line down what's close to here. Usually if I could depict the level, I see one side, I could see that this is going to be about the same level right there. Now this red line right here now depicts this zone. I see this as the actual zone itself. So I can create a little zone marker around it and say, this is the zone that sort of supports this piece or resists this piece. Okay. Now, all support and resistance lines, this line can be a support and or resistance. If the price is above, this line is referred to as a support line. And if the price is below, the same line is called we call a resistance line. Now, sometimes the price is going to travel up past it, and it's going to travel back down again. I always feel, and this is a statement that I can say truthfully and with some conviction, that anytime a line or a resistance level, support level is broken, the price wants to try to come back to it within 2 or 3 bars at one point or another. And you'll start to see that pretty true as you get to see this more and more and more. Every time that it's broken, the price seems to want to come back to it somehow, even if just a little bit. There are circumstances that it won't, but it does come back more than doesn't. Now, the red lines are the strongest ones, strongest zones that are in support and resistance, while the greens are usually just levels that have just been made within an intraday. Okay. Now, can green lines stay within an intraday longer than an intraday? Well, they can, but they get moved a little, not moved from the dailies, but you can kind of see why they moved from this zone here, from over here. Why don't these red lines go all the way across on TradingView? Well, on our other system on Dex, we used to have, which we won't have anymore, those charts, they would expand all the way across. This meant that there was a lot of lines always happening. So what we look at is the movement of the market. So this is August 9th. Today is August 11th, but this is August 9th. This is the end of the trading day right here, okay, at 1955, which for 2000, okay, on this particular one. And what this does for our little trading process here, we then start it over and start keeping the idealization of the support and resistance lines refresh. And it does so periodically throughout the day. All right. And why do I have it trade at this time at 2000 and not at another time? Well, because I want to refresh the daily high-low process offset of the open and close of the market for a particular reason. That reason is my own. Okay, so that's another element. The final element is the moving average, which is so stupidly simple. Just takes the last 50 bars and it has a look at them and gives us a level of what that price should be on the average. It averages out all 50, takes those prices and divides it by 50 and puts a small little dot that you wouldn't see. And all those little dots for every micro tick change, but they make this little line graph, as you see. Okay, so now we've talked about TradingView, getting yourself a chart, getting this process on, getting the indicator on, applying the one other indicator. Now, if you have a free system, this is it. You're going to have to come up here and change your asset, or we're going to, what I'll show you here in a minute is about making a watch list to be able to change through. And I'm going to get you set up if you have a free system or an advanced system. We'll talk about those in later videos. All right. Does anybody have any questions at this point? Nobody. Wow. I'm either the best teacher in the world or everybody's afraid.
No, you're definitely getting better as a teacher.
Good. Thank you very much. All right. Let's discuss now saving this process and what to do with that. Okay. So I'm going to come up here to the top. I'm going to treat this all just like it's a free system. Like you just have a free system. We're going to start with that level. I'm going to click on the little arrow right next to it, and I'm going to come down and I'm going to say rename. Now I'm going to name this the Dex Atomic. I'm just going to say free for mine. You can name this whatever you want to name it. I suggest naming it in some sort of fashion that don't just name it like the Euro JPY, because we're going to be able to move between the different charts, which is pretty cool. And I'm going to hit save. If I ever need to get back to it, okay, I'm going to come down and I'm going to go to load chart layout, and I'm going to be able to see that right here. I can also click the little star and make it one of my favorites. If I want to get rid of it, I can just simply click the X. It's going to ask me to get rid of it, and I can get rid of it. All right. Now, keep in mind, if you have a few of these features here, is that auto save on or off. If you have auto save on, every time that you come, it's going to save every 5 minutes. Every time that you change something on this pair, like if I change it to the Euro JPY, or if I go to the Audi JPY, whatever is saved in less, it's going to actually bring that one back. Okay. Let's see if I have a question here. Quickstart says, can you discuss counting back 5 candles in other videos you have spoken about going back 5 candles? What are we looking when we count back? I'll discuss that here in a minute when we get to the strategy portion. But yeah, as soon as I get to that, I'll discuss that. So in the saving of this, I try to keep the auto save off, okay? Because I've saved it under the Euro JPY, and I'll show you what I mean by that here in a second. In order to flip between the different assets, if you're using all 10 pairs, okay, I'm going to come up here to the top right-hand corner of the system, and I'm going to look for the little box with the 4 little lines in it. We're going to call this the watch list. All right. Now, your watch list might be really, really different, but I'm going to click on to where the asset is up in the top left here of this little box, and I'm going to say create new list. Okay. And I'm going to call this list Forex or Nadex or whatever you want to call it. It's going to give me a little blank screen in here. Okay. Now I could click on, can't really click on thing. I already have what the Euro JPY is all over here with all its little news and its ticker and all that stuff. But what I'm looking for is here in this little grayed out box up here called add symbol. And I'm going to start going down the list. And I'm going to go alphabetically, and I'm going to use the Audi JPY. Now this is, I usually like to have like the assets of the master pairs that are in there. And if you don't know what the master pairs are the ones on Nadex that have systems that run all day long. The free version does not have the function, can't create a list. Okay, if you can't create a list, then you can probably clear the list you already have. Is that correct? If somebody else could verify that for me.
Well, even if you can't clear it, you can delete them manually.
Yeah, you can go down and delete them manually. If I go down to watch list like this, I can just go ahead and hit the little X right there, and this will delete them all pretty quickly. And then I can come up and just create like the Audi JPY there.
You can add all the 10 pairs to that watch list on the free version.
Yeah, even on the free version. Thank you very much. Is that David?
No, this was Jerry.
Oh, Jerry, thank you very much. All right, so I'm going to go down alphabetically. Now, normally I'd put on all the pairs, but I'm going to, because I only trade the master pairs when I trade. You can use anything, but I'm just going to use like the Audi USD. Now, when you start typing in here, consistently use the FXCM ones. You can use Oneida and all the Forex.com, but I use the FXCM to keep the data consistent throughout the process. I ask you to do the same only because there's no real difference in the data, maybe a tick off here and there, but that doesn't affect the arrows of the process. But I always want to know that you're using that data. So that way I know that the signals, the arrow is consistent for you, just in case it does get weird with Oanda or Forex.com.
Yeah, and FXCM is very reliable. You know, you don't have to worry about outages and things like that.
So then I simply just go down and I place in the 5. I'm going to place in the 5 master pairs here, and then let's see, Great Britain Pound, USD, and then USD, GPY. You can make another list with the others after the fact. At any time, you could have your list, whatever. So now the best part about having the watch list is I can squeak this over just a little bit, and I can kind of see what they are. right? AUD USD, Euro USD, Euro JPY, Great Britain Pound USD, and USD JPY. Why do I do this? Well, just like we had before, where we had all the pairs in the left-hand side, this will get me to a very quick and easy process to be able to go between the different charts. Now, one of the best features of this system is the memory of the actual chart itself, and why that's so beautiful. If I put a box on this particular chart for the Great Britain Pound USD, and I switch over to the AUD USD, and I come back to the Great Britain Pound, my box is still there. Why is that cool? Because inside that box, I can put a note. The AUD USD, and then come back and see it, it's still there. And it will always be there. You can scroll all the way. If I had it all the way back over here, you would still see it all the way back over here as well. And this is really good because it has the availability to take notes, to say, okay, this is the level that I took it at, and you could put that note on there. You could also actually paper trade with this process. You could look at the strategy and say, okay, if I did take this trade and I see on Nadex that there's this particular level right here, I would have taken that, and you could see if it won or not. You could tell yourself, okay, this is the trade that I won. You could put a little note there. However involved you wanted to get in that process, you could get. And why is that so good? Because now you have a third level of training that you can apply to yourself without the activity of actually physically making a trade. So now you have live, where you have live money you're trading, demo, where you're trading in demo, and paper. We refer to this as paper trading because you don't actually attach to the exchange at all now. Now you're just making the assumption. But what I would do is not go with the Forex level, but the level that would be on Nadex. So if Nadex has a level of a statement at 3093, 1.3093, then you just put a line on that by that arrow. What I would suggest also, if you're going to do that, is start where the arrow begins and ends for your line. So if that was the level that you would have taken, would you have won that trade? And start to paper trade at that level as well. This will get you the confidence of being able to select the proper levels before you even touch demo. And then what do you do next? Start trading demo. How I use this process of paper trading along the way is that I give myself the availability to, now that I'm trading live, you don't think that I trade certain levels if I'm unsure of maybe there's heavy news without affecting my numbers? See, having demo numbers isn't as important as the consistency of how much money you've made, but the consistencies if you're picking the right level, learning how to choose that level, and doing it without mistakes, choosing the wrong direction or the wrong level, or I put too many contracts into that stuff. Getting all of that is important, but learning how to choose the proper level and training yourself how to see other variant levels that maybe you wouldn't normally trade. So just put a line on it. And they're simple lines. It's not like you got to have an engineering degree to figure this out. Like you could say to yourself, would I have done a trade at this level? Let me grab the screen here and move it. Where would I have come at if this pair was happening here? Since I'm going to sell, where would I have come to? You would have probably came to here. That's where I would have came to. And it would have been a loss. But not as a loss as, okay, well, hang on one second here. Not so much as a loss like, oh, I got to figure out a whole new system, but to know that this is a natural loss. That's the other thing. All the arrows are on here, but it doesn't mean that every single one's going to win. You do have natural losses, even if there's no news affecting or what have you. This system isn't meant to be a 100% trading platform. You're meant to find the average that'll make you money. That average is 62%. For you to be successful at trading 45.55, you need a 62% success rate to make good money. To break even, you only need about 53%. Okay? Even if you're trading 50-50 on the working order side, you still need that little higher level to make it because you have what we call a bid offer spread, as well as fees that go on to the process. All right? So with that said, enjoy the drawing tools that are here. Create your box, create your levels, do whatever you do. Keep your housekeeping pretty clear. Make your notes to yourself very clear. And then what happens is that another great feature of history keeping is the snapshot. Now, normally you could take a screenshot of this or what have you, but I like to take a snapshot. And what does that do? This gives us our own little copy and paste that TradingView is going to keep, or you can even save it to your computer. And why is this so cool? Well, because now we have a history, if you will, of the trade that you just did with your note on it, which you could put where? Right in your journal. Why is that so cool? Well, because you can simply add the trade that you just took. You could draw an arrow to it and say the direction, say the level that you took, and see and learn from your mistakes even more. You can even house where your paper trading is as well. I would have taken this one. I would have taken that one. Oh, look at that. I would have won. How many would I have won? Well, it looks like by these pictures, I've won 1, 2, 3, 4, 5, 6, 7, and I lost 2. So now you're training yourself with data and history, and you're becoming better and better. You're learning from your mistakes. That's all this trading is. See, I can give you the strategy. I could give you the mentality and all the tools, and you could still mess it up. Learning how to trade it is very simple. So far, I haven't given you anything that requires you to have a degree in rocket science. And really, there won't be any. All right, let's go to the next features. It's one of my favorite features, by the way, is being able to utilize these charts to this level as I draw more boxes all over it. Oh, if you do draw anything on here that you don't want, once you highlight it, you'll get these little bubbles, okay, these little circles. Okay. You hover over the end, you can probably move this stuff around, and everything's pretty intuitive. You can move it and do whatever. But if you got something you don't like anymore, just hit your delete button. You can also right click the actual asset as well. And you can also say remove drawings, and that'll remove all of them. And just like anything, holding some hotkeys down like Control Z will undo anything you just did. Control C will copy anything that's highlighted. And Control V will actually paste it another box in there for you of anything that you've had copied. Now, I'd be careful with that feature of doing too much, because anything, if you have all these lines copied and you do that, and then you do something like that, you're going to get a tremendous amount of lines, as you see, because it pasted a whole new Dex Atomic system on. And if you got too many Dex Atomics, it's going to give you some other stuff on there. So I'm going to hit Control Z a few times, get myself back to this area. And I'm going to delete some of these boxes in there. Oops. And remember, Control Z is undo. All right. So now we have a way to be able to trade. We have the tools. We have the process. We just basically have everything here to fire off the strategy itself. So at this point, I'm going to ask the proverbial question. Does anybody have any questions on how, because that's what this training was to be today, was how to get the process on before I start talking about strategy, which I'm only going to talk for a few minutes because there's a lot of training on strategy in the process. Okay. Now, let's talk about the 3 main strategies that we have here. They're very, very simple. The moving average is the fulcrum of the strategy. Whether or not the price is above or below, or the arrow is above or below. The arrow sometimes can be below the market or below the moving average, like this one here, but the price is still above it. When the arrow comes out, it comes out on the open of that bar, or the close of the previous bar. Okay, so the close and the open should be relatively very close. But because this arrow comes out on this bar when it first comes out, it doesn't have any price. So if the arrow did, it would be up here when it first came out. So that means that the price is above the moving average. We call this first strategy the over-under strategy. if a green arrow is above or over the moving average, this is a good trade to be in. Okay, it means that the price is actually moving above the moving average. Now, sometimes that's okay because the market's probably heading down and this is going to be sort of like a little pseudo reversal, which it turned into. But I usually like to see some sort of other setups with an over under. Now, if you take the over under, to validate the trade itself, simply the green arrow has to be, or the price has to be above the moving average. And then you start your pullback of the price. I don't do it at the money. That's not what the ATM stands for. The ATM is for the pricing model that we're going to buy the contracts for. Okay, there is an ATM strategy out there, but we don't use it because it has a lower rate of success that sort of brings us just right under break even. There has to be certain things that happen. So we're just going to talk about the over under. In this particular case, there's a hybrid of the over under, which means that it's the first over under of the process. Now, what does that mean? That means that if the price has been under for a while or been doing whatever, it's been under, the first time and the first signal that comes above, that goes crosses over the MA and makes a signal above it, that first one is your best signal. So would I go with this one here? And the answer would be no, because it's not the first one. Actually, it probably would be okay to use that one because of this. It broke over that MA and then kind of came back. So that's what I would be looking for. Now, would you take this particular signal? Well, remember, was the price below the market on this open? And the answer is no. So I wouldn't have taken this signal. Would you have taken one that goes against the trend on this particular strategy of the first or over under strategy? The answer is no. I wouldn't take that. Now, so the first two strategies are very similar. You have the over under. No matter if the price is over or under at any time, you would take the trade, whether it had 3 or 4 unders in a row or what have you, or you would only take the first one that happens to go over or under. And the final one is the all in, which means that you go with any arrow in its direction, just with enough pullback to certain support and resistance levels. Each one of these systems, each one of these processes has a different mentality of trading. The first over under, you're not going to get as many trades that you're going to be able to take. Like on this particular pair, you would have to wait until all the way right here to have a pullback to actually get. And you might lose that first one because it takes a while to get to that point. But then only 2 hours later, you got another opportunity here, which would have looked like it would have won. I would have come back down to this level right here, this little first pullback, and we would have gotten picked up. How do you know I would have gotten picked up? Well, I know with the 45-55 strategy, if you're within 2 pips, you're possibly going to get picked up, especially at the beginning of the process. If you get towards the end of the hour, you may not get picked up at just 2 pips. But I have seen this happen. Okay, many, many times within 2 pips of the statement price on Nadex, you could possibly get picked up. And that's easily within 2 pips from there to there. So you would focus on the first over under. Now with the just standard over under, as long as the pair is in the direction of what side it's on the moving average. So I would take this trade. I wouldn't take this one, wouldn't take this one. I would take that one. That would have been a loss. Or maybe it would have. Yep, that would have been a loss if I would have came to this as the level, which I probably would have. Remember, I'm looking for more information. I probably, if I'm really looking at it, would have came at this level to be somewhere in between here, right there, which looks like I still would have lost. Yeah, price was up here. So there still would have been a natural loss right there. As you could tell, I'm not here just to force fit trades in to show a whole bunch of winners. I'm okay showing losers as well. But I would have lost that one, but I would have won that one. What would I've come to here? I don't think I would have gotten into this one. I'm one to look at every single trade that comes over and look at lights and look at levels and all that stuff. And we're going to talk about the all-in strategy here in a second. Okay, so the first strategy, first over under. The second strategy, over under. Okay, so whether it's the first one over or not. And the final is the all-in. Now, the all-in comprises that you have to be very good at learning the different levels. And what do we do to find a level? Well, on the first over-under, or the over-under itself, I always go back to the first little resistance of however many bars. If we look at this green arrow, and Quick Hitter asked me in the beginning to look at, or a little while ago, to ask, what is that one video you did where you look back the last 5 or 6 bars? That's very simple. That should be very simple to see. You look at the last 5 bars and you find where is the valley. On a buy, you want to look at the valley, which is the first little drop down like this, right? Or you want to look at, on a sell, you want to look at the hill. Okay. And why is that important? Well, because usually the hill means that that's the highest level. Okay, so I would go back and I would look at the first little hill here. If I started off and I come back to this particular area right here, this would be the first hill. This would be the second one. Now, could I have come back all the way back up here and put a working order on? The answer is yes, I could have. If I wanted to, if I felt like there was a lot of news, or I felt there's going to be a lot of liquidity or a lot of movement in the market, I could do a pullback to a certain level. At any time that I'm trying to set a level, I want several things to be sure. I want to make sure when I look left that I'm finding multiple instances of that line being adhered to, not just a line, but other reasons why that line should be adhered to. Sometimes that may be where a little channel zone has happened here. Like this shoots right down the middle of this little squabbly bit. Okay. Sometimes if I can't find something within, say, 2 or 3 hours of the time, okay, that I can come back up to another set of hills, which could have been right here. Put a working order on. Would have gotten filled? No, but I wouldn't have lost either. See, putting a working order on is not about picking the right trade to win, but it's picking the right trade to win with as much risk averted as possible. Okay. The more risk you avert, the less chance you have to get picked up. But when you do get picked up, it's a very high rate of success. David Menning is a master at picking levels that protect him, but also still gets him into trades. You don't have to go back all the way up. You can be too safe. Like I had a question with Chris a couple of days ago about, am I being too conservative? Yes, you could put a level all the way up here. You won't get bought, but you won't lose, but you'll never trade. So you have to assert your level of risk that you want to be able to do. Okay. So in our case, what ones do you go back to? That's what you're going to have to figure out. This becomes the creative part of it. Come back to a certain level. You know, this only has one little bit of information right there. If I look left back a couple of hours, I'm not really seeing too much. If I see this, I could possibly use that area, but then deal with the consequence of losing the trade if it were to lose. That same trade could have won, and it could have validated that process. This could have been just one incident of that trade losing at that level. Okay. The other qualifier for most is that I usually like to see, if I'm using a first over or under, that the arrow is within at least 2 or 3 bars, 4 bars of the actual piercing of that, right? So if it does go over, I usually like to see it in 2 or 3 bars of it. Not right at the line, not real super flat, not technically just over. You know, I'd like to see it over and into the process of being over the line. All right. The all-in strategy is that you get to look at every single arrow and go, what level would I pull back to? And can significantly get bought. Okay. If I'm using the over over under strategy or the all in, I'm now looking at every single one. I may get into more working orders, but I may not get bought up. And what am I looking for when I see these? Well, if I draw in closer, I'm going to look at a few things, like a few consistency things. Like if it's a green arrow and I'm on a red bar, I want to go back until I get the opposite of the trend that I'm in. So if it's a green, I want to go back to the first set of pullback. And where is that? That's right here. Now, because it's a buy, I want a valley, right? I want it to be up and down. Is this significant enough? If it's not, go back to the next one. Where's the next one? All the way down here. Isn't that significant? Now, does that mean that that'll get bought up? The answer is no. It may not get bought up. You might be too conservative. But again, draw your line there. See if it would have won. If I would have put it to here, even that just little bit would have created a loss for me. Okay, so if you went with the hill instead of the valley, if I went with the valley, I won. If I went with the hill, I lost. Do you see why it's important to choose your strategy and stick with it? Now, the same thing here with this arrow. I'm looking for, I'm on a red arrow and a green bar, but that's after the fact. So I'm going to go back to my first set of what? Of greens, or my bear, which is right here, or my bull's right here. If that's too close to the margin for me, then I can come back up to here and look. Would I have gotten bought? No. If I came down to this first one, now remember, on a sell, you want to come to the hill. And would I have won? Barely, but yes. You can do this on every single one. I usually like to see that the market is moving. Okay, not just flipping around just within 2 or 3 pips, 4 or 5 pips of each other. Okay. You could do this on every one. The all-in strategy has 2 comforts. You're going to put a lot of working orders on. You're going to get into trades and you're going to lose trades. You're still going to win. You're going to have a pretty good success rate. But this is what I do. This is what I look for. If I am doing it all in, I don't have to do every single one. I could tell myself I only want to do ones that are whatever strategy you want to add to that. Okay. I also know that a red line is a very strong process, a very strong level. I also start to add in factors of what coincidentally comes into my zone of support and resistance. Not just the dynamic levels, but I want to show you something. We talked a little while ago about this one process of being that the green lines and the red lines and the support and resistance areas is a zone, right? Individually is a zone. We call it dynamic zone around the support and resistance line. But overall, this is one big support and resistance area. And in that area, there's a couple of different levels. There's the mean, just right smack dab in the middle. And if you're not sure what the mean is between 2 levels, guess what? Come down to your box feature and surround that box. Look at that. That gives me a perfect area of level. That's exactly in the middle, those 2 bubbles. So if I take my line drawing tool now and I draw a line right through that box, I kind of have an idea exactly where the middle of that zone is. Just like I did here. Knowing that's the mean, there's another zone within the mean, and they call that the quarter zone. I know, right? It's like math. And why does this mean so much to you guys? Well, because each one of these little zones in this quarter zones can be construed as a level. And if you break out your main zone like this, you can now see, well, where do I pull back to? Well, if this is too close, if this is underneath this one, which one would I pull back to? You can use this facet to pull back to certain levels, as long as it has, I won't say coincidence, but as long as it has other levels that it's with. Okay, like we can see a coincidence here that this pair comes down, bounces off this quarter zone here, or this mean zone, right? This is the mean. And it looks like a pretty good deal for that process, right? So you would use a statement right at the mean, where this one would have been a little bit too conservative and you wouldn't have gotten filled at all. And you could do that at every part of this. If the arrow comes out, you simply grab a box, go to where the beginning of that product is, look at the area that it's in for the support and resistance, right? Like if this is down here, what area is it in? Well, you have a couple different areas. You have this green area here, and you have this green to red area, and you have this whole big giant green one. It's here. So I could say if this is going to be a sell, I want to use this zone, okay, to be my levels, because I'm looking for the lowest area right there. So I could take it back to, say, right about there. And what this is about 2 or 3 hours worth of information here. I can then separate that by doing something like that. And now I know that a very good tight level is whatever my mean kind of touches the price at, where it rejects it or it bounces off of it. So that looks like a pretty good area to be with. Now, it doesn't mean that I would have won this particular trade. I keep honing on this one loss, but I want to show you what it looks like even on the loss side. So just like the hour that just came up, I would take my box. I could go back just grab onto it, go back here. What area do I want it to be at? I want to look for the low, and I want to look for the high back in the area that I'm choosing. And then want to take my yellow line, but look at the coincidences already. The areas that I chose for the high and the low, they already have a mean line with that green line that goes shooting right down the middle. You're looking for coincidences within the practice of your zone. So that's one of them. Okay. The other is that if I now take the quarter zone and cut that in half, look what happens there. I get that and all of these. So now this could be actually another good pullback zone, a little higher risk, but still the availability. Using this strategy of using a particular area or even just a support and resistance or even time is all relative to you. Practice with those, because you can know that if you draw this box out and you decide to later go to trade something else and then simply come back to it, that information is still going to be there. All right. At this time, I think I've, to ad nauseum, talked about the strategy. It's now just coming in and practicing. Does anybody have any questions whatsoever about any of the practices that we talked about today? Lovely. Oh, wait, we got one chat. So where would you enter? On which one? The one that you're seeing on the chart right now? Okay. On this particular chart, where I would enter into a trade is because it's an over under, and I could trade any arrow on this. I try to look at all variances, right? So I would look to where the very first pullback is, which if it's a red on red, right? But we don't know what that one is when it first comes out. I would go back to the very first one, which would be up here, okay? I would look at that hill right there. And that's where I would put my trade. And if it got filled, it got filled. If it didn't, and if it doesn't get filled, then so be it. It's just another process that's inside the cannon fodder. All right. If I go to the Audi USD, watch how fast this becomes. I look, there's a signal there. I'm going back to the very first one, which is all the way back up here. The first hill, because remember, right? On sells, we use hills, and on buys, we use valleys. Where would I have traded this one? There's a lot of information that's happening here. I'm looking for the first true hill. Because there's so many in here, I would have seen this as like a little bit of confusion in the market. So I would have came down to the lowest of the extremes, which has been here. Would I have gotten picked up? Probably not, but I would have protected my investment. Let's go to like the Euro USD. Again, where would I have come to? First hill. Would I have gotten picked up? Maybe not. But again, what I'm looking for are secure trades, okay, without giving myself too much risk. Learning to practice at this level, see if you would have gotten picked up, right? I could have looked at the zones too, right? If I felt real comfortable with some good red zones, I could have used those. All right. I hope that answered your question. Good. All right. Well, I know this went pretty long today. I know that it was impromptu. I'm using this as some part of the training tools. I'm going to sort of segment this out to talk about the certain areas. So please bear with us as we get into delivering you more training. If you missed any part of this, it was recorded. I'm going to deliver it out as a whole, but also as little segments of getting the indicator on and getting that stuff started too. If you do have problems with getting anything on, please keep in mind that we have the Discord unit system in there, and you can easily jump into a room with us, share your screen, and I can walk you through the entire process. All right, John says, is there a way to view more than one chart, like 4, 6, 8 at the same time? Yes, you do need to have an advanced, either a pro or one of the other systems in there. Well, watch the video again on the lines there. They compare the more times that the red line touches. The red lines are devised around how secure that level is over a period of time in that day. So if it gets touched more than 2 or 3 times at those levels, it's considered because this support looks back at previous ones that it has done. Like here for the previous day, that same area was done green, but now it's red because it's been touched even more. So the darker it is, the more times that line has been touched or that zone has been validated. The green lines are just less times and more intraday. A little darker, the darker the line, keeping red as being the darkest, the more times it's been touched. So I hope that answers your question. Where was I before that? I've lost train of thought here. Hang on a second. I know it's within the chat system there. Oh, okay. So you simply would come up and add a new chart layout. Like you could load the chart here, but then you could correct select layout, right? If you have a multiple chart, and if you just wanted 2, you would have it like this. They're both the same in there. And so what you would have to do is come up to the area, click on the chart, and then up here, you would have to change it to something like that. And then you would have to save the system in that chart layout, okay? I have one that has 5 in it. I don't do more than 5. It gets a little too crazy if you start doing, 10 or I think, what is it that you do 8 at the most, okay? But you will have to have either a pro or one of the higher paid versions of the system for how many that you can have on the chart at one time, okay? What I do mostly at that point is that if you hover down here, these are more of the advanced tools. If I hover down here and I click on that, it'll solo the chart out. And then when I hover back down, this little restore chart will bring me back here. Okay, I can also reset the chart at that point. Okay, another good question. Thank you very much. All right, you guys good for now? Make sure that you are delivering your journal. You don't need to make a new journal every week. Keep the same journal. Just work with the tabs. Okay, make sure that the tab system here, I'll show you what it looks like inside. You could just keep on going forever. Like David M here has a couple different tabs down below. As you can see, he's doing very well for the month so far. Jeez. Wait, okay. No, really? This is one day? Okay, $419 for the day. Whew. Oh, there it is. So far for the month, I guess. $279 for the day. $288 for a day. $172 for a day. Nicely done. David, this is amazing. Great work. Jeff C. Got some boo-boo. Something's happening. MA flat. Green just today. So far for the week. Okay. Jeff Vandenberg. We'll have to reach out to Jeff C. Find what's going on. Sometimes you can get into an area of trading that like later on at night or what have you, or at a particular time, and you can't make it up. You can't get back into trading again for that morning. So you take a small loss and then you come in and have another second bad day because you choose a different zone or what have you. So it's really dependent upon when you have the availability to trade. I'm not sure what's going on with you, bud, Dylan. You got to give me some information here. What's happening? We need to have a conversation. Jeff W.
I mean, at the moment, Max is talking about when you have time to trade. I can only trade normally once a day.
Right.
And that's either when I first get up or if I manage to get home for lunch.
Mm-hmm.
And that's it. So I've just updated mine for the month. So yeah, all in all, it's when I can trade. I don't push it.
Yeah, mine's not up to date. I need to add last week.
Oh, don't go to yours. Yours not up to date. Okay, guys.
Mine's up to date.
Yeah, yours is
For the month. That's it.
Hashtag Thor.
God, I love those hashtags.
This is for the month? Jeez. Nice work. Not bad, Chris. Mr. I'm Not a Trader. Here's another Mr. I'm Not a Trader doing very well. Tim W. These kind of results in here, folks, are by real individuals that suffer day to day to try to get something to work for themselves, and they're making it happen. If you're having problems, you should be reaching out to us. If you're having issues with the process, okay, you need to be reaching out with us. And we can only do that by having a glance. Like, we know that we need to contact a few people that are inside the den, because sometimes you get into a groove or you get into a little bit of a lost pattern, and because you're choosing bad decisions, making bad decisions, or maybe you're not, maybe it's just bad timing, but we can help you alter that. We can help you get around that. We can pull you into Discord and we can trade, and I can watch you pull some trades in yourself. I'm willing to do that. This is very easy to do that. We come into the trader voice chat, and then I'll share my screen. I'm not going to sit and show you. I want to see you trade it and see what you're choosing. Okay. By the way, if you get that there's so many lines like this, the best thing to do, if there's so many lines like that, is to do the following. You're going to go into your system here. We're going to open up a screen right here. You're going to go right over to your little where your price is. You're going to right click. You're going to say scale price chart only. See, sometimes it's like that, right? So what we want to do is scale price chart only, and that's that. All right. I'm Max Farrow. This has been Dex. Thanks a lot for Paul and Thor and Chris and Vivian, everybody else who's participated in building this company the way it has. We are taking on a whole new level, which is very strong. We've condensed it down to a very strong core, and we're getting a lot of people who are having great success. Thank you very much to all of you that contribute to that process as well. And we'll see you next time. We might have another. I'm trying to keep it organized, and I do apologize because we have a lot of stuff going on. So we will have more of these impromptu, but for the most part, this will kind of be it. We're going to have the trading stuff. If you have any questions or you need a meeting or what have you, reach out to me, ping me in Discord. If you're not part of Discord yet, we have a problem. Get into Discord and start making it work and start utilizing that tool. All right. I'll see you next time. And as always, trade well.